Welcome, friends of the Timeless Investor Show. Ari Van Gemeren here, your host, real estate fund manager, and avid fanatic of history. And we have a special treat for you today. Typically on this show, I do solo episodes talking about God knows what, lots of interesting things. But every once in a while, we have exceptional guests that we invite on. Builders, innovators, people doing really amazing things. And this is my third collaboration with Mario. Our guest today is Mario Innecco, the owner and runner of Innecco 64, an incredibly successful YouTube channel with over 160,000 subscribers, I think, to date, or more, which is incredibly impressive. And Mario is an expert on all things precious metals, commodities, kind of what's going on. And I thought this was a timely discussion because of the broader backdrop of what's happening in the world. Obviously, gold's unprecedented rise. It's just an incredibly timely conversation. I'm thrilled to have Mario here. Mario, did I miss anything?
No, you didn't. Nice to be here with you too, Ari.
Yes. And you've been a great friend of the show and recommended us a lot. So we really appreciate you being here. And it's my privilege to have you back on our side with our listeners as well. So look, I think the big question on everyone's mind is gold has crushed, obviously. It has massively outperformed pretty much everything, maybe barring Bitcoin, which is kind of an unusual, we could talk about Bitcoin later, but conventional asset classes, gold has kind of obliterated everything. What is driving that?
Yeah, I would say it's inflation, even though we're told that with the exception of what we saw after COVID, that we haven't had inflation, that the central banks have been able to control inflation. But I would argue that they haven't. They've doctored and fooled people into believing that inflation is the CPI, and they look at core numbers, right? And to the central banks, 2% inflation is a good thing, and I would argue that it isn't, because that's a tax on people,
Yep.
and it's been a lot higher. And gold is money, really. You just have to go back to J.P. Morgan in 1912, I think, in a testimony in Congress. He was asked what gold was, and he said, money, and everything else is credit. So gold is not easy to conjure up out of thin air.
Yep.
So I think it's just a simple law of supply and demand, Ari. And if you look at gold since the beginning of this century, in dollars, it's risen 10% every year on average, and also versus all the other major fiat currencies. So that's what it's about. And I think what's going on, like in particular in the last year or so, of course, gold was up like 65% almost in 2025, is a realization of this. The public's starting to wake up. And I think also the world's dividing geopolitically. And even though the dollar is not going to go away as a major reserve asset, gold is giving the dollar a run for its money. And so I think in a nutshell, that's what's going on.
Yeah. It's interesting. And there's so many things to unpack in what you just said, but I'm gonna bring Buffett into our conversation. He's been pretty known for being fairly anti-gold as an investment class. I mean, he has a famous quote of like, if you took all the gold in the world, it would be like a how many by how many mile box max. And he would rather own ExxonMobil than that box of gold because the gold doesn't do anything. I mean, as a avowed gold enthusiast, right? And a lot of my listeners like gold. Many of your listeners like gold. How do you respond to that? I mean, obviously Buffett's perspective carries a lot of weight, and he's been wrong, obviously, on how well gold has performed. But what is informing his thought process and why he doesn't think gold is a good investment?
I understand why he says that, actually, because in a sane world where gold and silver, let's say, are used as money, and that's pretty much the way it was prior to 1971, and especially 1933 in the US. Gold is money. and it's not an investment, but it's acting like an investment because it's outperforming all other investment classes. But I can understand why Warren Buffett says that gold is not really doesn't do anything, and it doesn't because it's money. Money is
Right.
not supposed to do anything, so it just sits there, but it holds its value in this crazy fiat currency world. Uh, but yeah, unfortunately, the gold is not being used for investing in, let's say, new ventures, new ideas. So I can understand what he means by that. But it gets confusing in the fiat currency regime because gold gold is not at the center. The fiat currency is at the center. So it looks like gold is going up, but it's actually the fiat currency that is going down.
Mm.
So, I mean, the same thing can be said for Federal Reserve notes and coins.
Yeah.
They just sit there and do nothing.
Yeah.
That's why gold is money, because it's not consumed. It's better. It's more money than silver, because silver, uh, even when it was money, it was consumed for industry. But gold is very little consumption, and that's why it's a really good money, because if the money is consumed like oil or coffee or cocoa, there would always be shortages, and it wouldn't be a good money. So
Yep.
I can understand what he says, but I would add as well that if you look at compare gold versus Berkshire Hathaway stock, uh, gold has outperformed since 1998.
Really?
So
I didn't know
yeah,
that.
you might as
Really?
well have put your money in gold than Warren Buffett's company.
That's
So
incredible. I
yeah,
actually that is news to me. I did not know that. That's fascinating.
it's either 1998 or 99, but it's yeah, it's basically outperformed, especially now that gold has gone up.
Well, it's interesting you say that because on our channel on YouTube, we've talked a lot about the risks of investing with people who are riding on their reputation, right? And this is no way intended as a knock on Buffett, obviously, but it's interesting because people in the comments often will mention Buffett as an example of that because there are many examples in the investing history of people leveraging a sterling reputation, pun intended with the word sterling, but leveraging their reputation, and then people just continue investing with them because of the reputation. Well, that's a really interesting point. And I guess the question, I guess the beyond the purview of this conversation, but I guess the question for an American U.S. dollar investor is: has Berkshire outperformed the S&P 500? Which I don't know the answer to either in that time period. But actually, that leads me to another. You and I had a prior conversation on this. So everyone knows, Mario and I had an aborted effort to have a conversation here before, and I had internet issues. So this is round two. So I have the privilege of having pre-flighted some of these conversations. You made a really interesting point. So the S&P 500 last year had a stellar year. It was 24, 25%. But I want you, for the benefit of the listeners, to discuss a little bit about what does that mean when you take the context versus gold and the context that the dollar has lost value in that time. So an American who only spends dollars, it's one thing. We just exist in our little ecosystem. And sometimes this world of different currencies and currency values is so theoretical and esoteric that it's hard for investors to really grasp what it means. But you made a really good point on, well, it's not really that good if you actually think about it in gold terms. So I'd love for you to dive into that a little bit more.
Yeah, I mean, if you go back to 1933, just before FDR made gold illegal, basically the dollar was as good as gold, and everything was measured in gold, S&P, Dow, everything. So, and if you go back even further, thousands of years, gold has been the ultimate and best measure of value. So I think that's why it's interesting to measure uh, the S&P in terms of gold. And if you look at the S&P gold ratio, since the top S&P and the Dow topped versus gold back in late 1999, yeah, S&P has been in a bear market. yes, it had a counter trend rally since like 2009, 2010, when things stabilized and people got back into stocks. But yeah, I think yeah, it's the ultimate measure of value, and that's why central banks still hold. Well, I think they hold about almost 40,000 tons of the stuff because
Mhm.
they know that when push comes to shove, that's the ultimate, yeah, the ultimate reserve to have. And yeah, and yeah, I've been measure a lot of stuff in gold. For example, cars. I think Incrementum AG, the guys from Liechtenstein, they do a lot of good reports on gold. They
Mhm.
noted that back in I think 2002 or three, you needed like 300 ounces of gold to buy a Porsche 911. Now now you need like 30 or 33.
Huh, okay.
So yeah, that's what I think it's important. Yeah, and even you said that Americans, yeah, Americans have been like privileged and oblivious to currencies because the dollar has been the major currency for 70, 80 years. So they haven't had to worry about like their currency devaluing because they can always print more and buy with dollars from abroad. But ultimately, it does affect import prices because if the dollar drops quicker against foreign currencies, you're going to have to pay more. And Richard Nixon, when he closed the gold window, he said, "Oh, it shouldn't impact anyone. The dollar in your pocket is going to be worth the same unless you go abroad as a tourist." But I think that's a very like naive way to look at it, and because yeah, if the dollar drops against other currencies, and let's say if commodity prices go up, the dollar will be buying less, and that's reflected already in the affordability crisis that we have in
Right.
the U.S.
Yeah. Yeah. I mean, as I've said on your show several times, I mean, I think the deflationary, the debasement regime we live under has massively benefited asset owners. And, you know, I mentioned this site before to you, WTF happened in 1971.com, which I reference on almost every episode I do because it's such a good site. But, when Nixon broke the gold standard is when the middle class in this country really started to get eviscerated. And I don't know if it's just this country. I mean, you live in the UK. Is it a similar story in other nations, or is this really an American story?
No, it's similar everywhere else. And in the UK, it started earlier than 1970. It started more like in the 50s and 60s because the UK abandoned domestically uh, and internationally the gold standard in 1931. So it's been along the path of debasement a lot longer than the US, even though the pound was fixed versus the dollar during the Bretton Woods, but it was devalued a couple of times in like during the 30 years that of the Bretton Woods, or
Yep.
25 or 28 years. But it's something that happens everywhere. Where I was born and I grew up in Brazil, I mean, the process started even earlier. I have some silver and gold coins from Brazil from the 19th century. So they did have some kind of sound money back then. But the 20th century has been a century of inflation in Brazil. And Brazil is like we have a lot of resources, very wealthy country, and a lot of a few very rich people, but the middle class is almost not there anymore, and so
Right.
there's a huge wealth discrepancy, and that's mainly because of inflation.
Yeah. And what do you say to? I mean, one of there's two kind of classic arguments against gold as a gold for gold backed currency. And the first one that I just love to get your perspective on is the argument. I think it's a Keynesian economics kind of argument, but that a gold backed currency restricts the government's ability to manage credit crises, to inject liquidity into the system. I mean, what do you say to that perspective? Because I know we align generally on we think central banking is problematic. We think it's created a lot of issues, but that is the economic orthodoxy today, that central banks exist to inject liquidity. And if you have a gold backed system, you cannot inject liquidity. So, like, what is the counterpoint to that?
Well, the counterpoint is that if you didn't have central banks, banks wouldn't act as as irresponsible as they do, requiring then the government and the central bank to intervene and to get the credit going again. I would argue if you allow the free market to do its job, that yes, you would have crises, but bankers and borrowers and lenders would be more responsible, and governments wouldn't even have to be involved. I think governments are there to administer the rule of law, protect the individual and the individual's property, and maybe the borders of the country. That's about it. Unfortunately, we've gotten into a world where everyone expects so much from government. And yeah, there is enough gold. It all depends on the ratio of gold to goods and services and stuff. But the Keynesian argument is that there isn't enough gold, and that the government has to intervene to kickstart the economy. But all that has done is bring us where we are, to a world where the debt mountain is humongous, like over $300 trillion worldwide, and we also have probably over 1,000 trillion, which is called a quadrillion, in off balance sheet derivatives. I mean, I'm not saying you wouldn't have speculation and crises if people just use gold as money, and the currency would be just like a convenient way to transact in gold.
Yeah.
So yeah, so that's why you call it gold back. But ultimately, the currency is gold, right?
Yeah.
Yeah, so that's my counter argument for it. I mean, back in the 19th century, even though we had, well, the central bank, the Bank of England in the UK, it was pretty much a gold standard. It was left to the market to regulate the credit cycle, and you had loads of booms and busts.
Right.
If you look at inflation, I think there's a good chart of the 20th century, and you'd have years where inflation was 10%, minus 10. But when you do if you look at it over 100 years, for example, like the Bank of England, they have an inflation calculator. Inflation from like 1820 to 1914 was minus 0.1 in the UK.
Yep.
And you had, so the market always does best than a group of men and women in a boardroom, I think. That's my Austrian school
Sure.
counter argument to the interventionist Keynesians.
And one of the debates that I've gotten into multiple times on various platforms that the Timeless Investor exists on is the argument that with a fixed money supply, growth is not really possible, and that most of the growth, because the classic gold standard period is what, end of the U.S. Civil War through the start of World War One, where like the world coalesced on a gold standard. And um, interestingly enough, actually, the book that really opened my eyes on this was the Bitcoin standard. Funny enough, what was really kind of arguing like the gold standard period of this era was like the golden era for mankind. But one of the common arguments I get back from people that are very much of the Keynes school of thought is, well, the growth that happened in that time coincided with the discovery of new gold deposits. And so like the economy was capped because of how much money or gold there was until there was a new gold strike. And then liquidity would get injected into the system. I mean, do you think there's validity to that perspective? Is that a fundamental issue with a gold backed system?
Well, I mean, yeah, there were big discoveries like the California 1849, and then Australia, and I guess also in Canada. Um, but historically, one of the reasons why gold is done so well as money is that it's kept up the growth of the supply of gold has been roughly around 2% over history. Yes, it might have picked up in the 19th century, but yeah, um, I think it's just right, and that's why it's been used so much as money. Um, and you could argue that also the finding of gold in the 19th century led to economic growth and population growth and technological growth, and we're still at that growth rate of around 2%. Gold found and produced every year.
Yeah.
So I don't agree with the Keynesians, and it's not just yeah. The reason the Keynesians focus so much on growth is that it's a debt-based system,
Hmm.
and it's because of that they need the growth. They hate net, prices going down, which doesn't make sense. I mean, wouldn't you rather buy something cheaper, like
Yeah.
that's more produced more efficiently and more mass produced? That's how things should be.
Yeah.
Um, yeah, so I don't see that.
Well, and I agree with you. And I'm gonna quote the Bitcoin Standard again, which I think is a fantastic read. Although we'll get into Bitcoin. The author is obviously very pro Bitcoin, but the perspective is interesting because there's this concept in finance, which I'm sure you're aware of, but I'll explain briefly for the audience, the time preference of money. So if you know your money is getting deflated over time and your money will lose value, that has all sorts of distortionary effects on how you invest, what you do, how you consume. If you know everything's more expensive tomorrow, it encourages consumption today. Because why would you wait to buy something in a year if the price is going to go up in a year? You might as well buy today. The benefit, according to the Bitcoin Standard, of this classical gold period was that it highly encouraged saving and investment versus consumption, which, the author points to a bunch of major technological breakthroughs in this period, major art breakthroughs, cultural breakthroughs, which was really driven by people's time preference and how they utilize their money, which I think is a huge argument for it. And is actually an argument against the idea that we require the constant inflationary regime to grow. You can grow through investment and savings just as well as you can grow through debt-based consumption. And our whole system today is based on debt, which is a really interesting way to look at it. But the thing that the thing that killed the classical gold standard, and I feel that this is like an inevitable issue that mankind will face. And as you know, Mario, I like to hash on the behavioral issues that drive humanity never change, right? We are the same as the Romans, the same as the Sumerians. We haven't evolved really as a species much beyond that point. War and financing war and great power doesn't play well with a gold backed system because states can't finance it. And the thing that killed the classical gold standard was World War One. And the state that was willing to break the gold standard and then print money and borrow was more likely to win. So all of the great powers going into World War One broke the gold standard, went to a debasement system in order to finance it. I mean, that's kind of an intractable issue. It doesn't really change the fact that gold itself is a good investment today, because we'll get back to today in a moment, but it's sort of an intractable issue with truly having a gold-backed monetary system because great powers fight. And like it's inevitable, like we'll fight. And today we're not really fighting, we're just spending on social programs. But it's sort of, like how do like there is no really, I mean, I guess the answer is no war, but like is there really a way to get around that, right? I mean, other than no war, which is not reasonable, not realistic with human history.
Yeah, I mean, like World War One, I think if they hadn't abandoned the gold standard, they wouldn't have been able to continue that war, and it would have been a great result, I think, because it wasn't really a war that uh, yeah, it was a useless war. I'm not being disrespectful, but it wasn't something that we needed.
Right.
So you're right that, you can't fight a war if you're gonna like stick to the rules because war
Right.
is actually breaking the rules, right?
There are no rules. Yeah.
Breaking the rules of diplomacy and going at it through force. But if you go back historically, like let's say to the Napoleonic Wars, uh, the UK suspended convertibility, I think, in 1797,
Okay.
and then in 1821 it reinstated convertibility, which is basically reinstated the gold, uh, their gold standard. Uh, so yeah, that was always up until then, and even World War One. That's what was expected. Yes, you would abandon it for during the war, but then after the war, you would go back on it, and they did try to go back on it to it in the 1920s. I think Churchill, he was the Minister of Finance, Chancellor, who tried that. But what he did is he went back at the old rate
Right.
prior to World War One. He should have devalued the pound, and
But he wasn't willing to. And what was the reason was it a pride thing? Was it like
yeah, yeah,
it was
yeah,
pride?
because they saw it as, well, we can't cheat, right? Because we're like breaking the promises that we made to pay so much gold for 1 pound. So, but what that did is that created like a really deep recession in the UK, and actually the Federal Reserve in New York helped England by cutting rates to keep
Mhm.
the pound from dropping versus the dollar. And what that impact that had was that it created the stock market bubble in the 20s. So all these
Right.
things uh, really have their consequences. And
Which
but
is which is a fascinating anecdote in history too, because one of these, either the creature from Jekyll Island or the Bitcoin Standard, talks about this in depth as well, which is that the Fed board and governors were very pro England, pro UK in their mentality, almost to the detriment of the United States. They effectively robbed from the United States to support the pound, which is one of these fascinating, like, you could call it like the law of unintended consequences. What happened? What's the ramifications and the knock-on effects? And unfortunately, one of the knock-on effects is World War II, right? Because you create this global depression, all these issues kind of arise, and then we get to the conditions that rise. Weimar Germany kind of falling apart economically creates the fertile environment for the rise of fascism and other issues that came about. I mean, it's amazing. I love, obviously, I love, and you as well, love the throughput of history. Like a decision here has a ramification 10 years, 20 years, 30 years down the line. So to fast forward to today. So I understand the argument about inflation, right? And I love to, dive a little deeper into kind of the perspective on inflation. But one of the trends that seems to be driving gold dramatically lately is central banks have massively increased their gold reserves as well. What is, in your opinion, are the reasons for that mega trend, right? Massively growing stockpiles of gold, right, by major central banks all over the world. And what is driving that?
I think it's diversification of their reserves, basically away from the dollar. And there's a few reasons because of that. I think the first one was the reaction by the US to the great financial crisis, of printing trillions of dollars, and then taking on so much debt. I think these other central banks around the world, they know that that's not going to end well. So they diversify into what they know to hold its value over millennia, right? They start buying gold. The other reason I think is to do more with politics, and the fact that the U.S. has been, for the last 15 at least or 20 years, using its privilege of having the world's reserve currency to impose its political will, with sanctions and other things. So that's another reason why I think central banks around the world are diversifying away from the dollar. They haven't like gotten rid of all their dollars, but I think they're gonna go to a level which is the bare minimum, and because gold is a neutral asset, and you hold it, and it's no one else's liability, and it's not gonna sanction you. It's not gonna act against you. It just sits there, like Warren Buffett said. I think
Yeah.
that's why they're doing
Yeah.
it.
Well, and I just think for the audience's edification, it's interesting. So the US is obviously notorious for seizing foreign reserves and assets of countries that we're sanctioning or dealing with. Where do the Chinese hold their gold? Where do the Russians hold their gold? Where do the Indians hold their gold? Presumably, they're not leaving it in New York. They're not leaving it in London. So where is it? Where does it go?
Yeah, I think maybe the Indians do have some gold, maybe with the Bank of England and even the Fed. But I would say now the Russians have all their gold in Russia. Probably, I don't know where they store it exactly, at the central bank and other places. And the same thing for the Chinese. I think even the People's Liberation Army probably stores gold. So they are thinking, though, of through the Shanghai Gold Exchange to build vaults uh, outside the outside China, like in Hong Kong and Saudi Arabia and other countries, because they want to build a new international system. But I would say they hold most of their gold at home.
And when these central banks are acquiring gold, they're acquiring gold. They're not getting paper that represents gold on a stock exchange. They're actually buying physical gold and shipping it to Shanghai, shipping it to Moscow, and holding it in place. Okay, it's interesting. So, okay, so I think we're coming to the main thing here. So, I just did a piece on the petrodollar as one of the most important concepts for any investor anywhere on this planet to understand. Right? I think it has driven the world, and it's certainly driven the America's dominance on this entire planet basically since 1974, when Nixon authorized this secret deal with the Saudis, and OPEC started transacting in dollars for oil. For the audience's benefit, and I'm going to link the previous video I did in the show notes here, but for the audience's benefit, Mario, can you just quickly opine on or explain kind of what is the petrodollar system, and what is the impact? And then I want to jump into what does Venezuela mean? What is happening with Iran? What does that do to the future of the petrodollar system? And does that have negative effects on gold as well? So I'd love to hear your perspective on that.
Yeah, I mean the raison d'être of the petrodollar was Nixon's closing of the gold window in 1971, and they try to keep the fixed exchange, foreign exchange regime going, but that failed by 1973. And one of the reasons the Americans did the deal with the Saudis is that um, they had to find something that created demand for the dollar, right? So because the dollar now was just a fiat currency, and so what would what was the interest in buying having dollars if it wasn't, as good as gold. So they came up with this idea to go to Saudi Arabia, which at the time was the biggest oil producer in the world, and say to them, we will look after your defense of your kingdom. And in return, you have to promise that you will sell all your oil in dollars. And what that did, it led to OPEC pricing all their oil in dollars.
Mhm.
And as there's a lot of countries that don't produce oil, and the only way to buy oil was to have dollars. So other countries around the world, uh, they had to sell something to countries that had dollars, especially the U.S., so they could have dollars to buy oil because it can't function. The economy can't function without oil because it's energy, right? So that was a clever idea. I think it was
Yeah.
Kissinger who had that idea and put that through. And it worked really well because the Saudis and the OPEC countries, they took those dollars that they got for selling oil, and a lot of times they were buying treasuries and U.S. investments, and it kept the dollar strong, kept interest rates low, especially in the last 40 years. But I think in the last few years, though, the petrodollar's power is waning because Saudi Arabia and other oil producing countries. They're doing a lot more business with China, and China now is paying for their oil in yuan.
Mhm.
And Russia is also a big oil producer, and they're selling their oil for maybe yuan or for rubles. So the petrodollar is actually under threat, and I think Venezuela is like a last ditch effort to try to like scupper the end of the petrodollar. And to be honest, I'm not sure it will work. I noticed that ExxonMobil said that the CEO from them said that Venezuela is uninvestable. And the 300 billion barrel reserve that Venezuela supposedly has, uh, I mean, that would take years to like develop the infrastructure to access that. And I've heard as well that it was the Venezuelan government who estimated those reserves.
Right. I've heard
It,
that too. So it's a little bit suspect whether or not they actually exist.
yeah, I mean
Um,
they probably have a lot of oil, but maybe not as much. So yeah, but the petrodollar was it was like a substitute for the gold standard. But
yeah,
BRICS as well, and what we're seeing with the BRICS buying a lot of gold and trying to set up their own payment systems. That's a huge threat, and it's really, uh, and I think Trump is aware of that, and he's been talking about that. In
yeah.
the prior under Biden, they didn't really care. They didn't seem to be too concerned. But I personally think that the petrodollar hasn't really been positive for the U.S. economy because it's allowed the U.S. to live beyond its means, to borrow and borrow, and what it's led to as well, Ari, is that um, countries around the world they've had the incentive to manufacture cheaper and maybe better, maybe sometimes not better, but manufacture cheaper so they can sell to the US to get the dollars so they can buy the oil. And what that's done, that's really yeah, that basically has destroyed the US industry and
Yes.
manufacturing. And so and Trump knows that, but I'm not sure uh I'm sure he does realize that having like the petrodollar was part of the problem for that.
Sure.
He seems to come out and say that it's other countries trying to, take advantage of the U.S. But the U.S. has had this exorbitant privilege. That's a term by a French finance minister in the 60s or 70s. The exorbitant privilege to just print money out of thin air, and people will accept it for goods. I mean, other countries can't do that. Zimbabwe can't print Zimbabwe dollars and buy whatever they want. So, yeah, I think it's a good thing that the petrodollar is going away. And I think going back to more gold and silver as part of the system will be, yeah, better for everyone, the U.S. included. It might feel, yeah, it won't be as easy, but
Yeah.
um, yeah,
It, it's interesting because, and thank you for that explanation. I think I agree with you 100%. I don't think it's been a good system for the United States in the long run. Certainly, maybe it made sense in the beginning. I think the issue that the U.S. faces now is that the death of the petrodollar system would be an existential problem for the United States now, right? If the cost of our debt, just to further elaborate on this point, all of these nations have to trade for oil, and oil is the lifeblood of all major industrialized economies, and all of them have to buy oil in dollars because OPEC is largely still only transacting in dollars. Now the Saudis have said they're open to considering new ideas, but we'll see. And I had a nice chart to pull up of U.S. military bases across the Middle East, but if you look at it, it really looks like I mean, to be trite, it looks like a U.S. colony, right? I mean, it's like there's like 19 military bases across the Middle East, massive military presence. We have multiple aircraft carrier groups there. And it really lends credence to the idea that it's all just about oil at the end of the day, right? And the US is clearly willing to kill to protect the petrodollar system. And you can go back and look at Gaddafi, right? Gaddafi proposed an African dinar backed by gold and BRICS currencies, and he was removed. I didn't even realize this, before the 2003 Iraq invasion, Saddam said he would start selling oil in euros. Lo and behold, Saddam was removed from power. Maduro in Venezuela has been a huge proponent of trying to break the US dollar petrodollar system. And obviously, we just removed them. I think it's interesting because I hear a lot of commentary on like, oh, the US is trying to seize Venezuela's oil reserves and control their oil reserves. Maybe. To me, it's more of a play on China has no access to domestic oil production, right? They're the largest importer of oil on the planet. And if the US is successful, and we appear to be successful thus far, in blockading Venezuela, and Venezuela is a nation that Russia and China both invested a lot of time, energy, and money into trying to develop and cultivate as a source of oil for themselves. And it's like, for all the listeners, if you haven't read The Prize, it's a highly worthwhile read, looking at all of modern history through the lens of oil and oil production, from like the Nazis losing the war because their tanks literally ran out of oil. Japan struck Pearl Harbor because they were 6 months away from losing all of their oil supplies. And the reason for striking Pearl Harbor was to seize domestic oil production in the Pacific so they could support themselves. Like it all really just comes down to oil. And to me, it's an interesting period that we're in right now because I agree with you. I think the world probably would be better off not on a petrodollar system. And the US in the long term, and that's the key thing, in the long term would probably be better off if we could get off of the petrodollar system and wean ourselves off of cheap debt and financing. The problem is, as you know, no elected politician in a democracy will ever elect for the long-term benefit with a lot of short-term pain. They will never elect for it. So to me, it's like we're very deep in this system. We're willing to regime replace and kill to protect the system. And I just don't see that changing in the near term. And I think this is a little bit of an interesting perspective that was given to me about China in particular is China is playing the rare earth metals and whatnot game for like the next 100 years, the post hydrocarbon era that will inevitably come. And that they're laying the foundation to be the battery manufacturer of the world, to like pioneer electric vehicles, to pioneer a world in which hydrocarbon is no longer the necessary component to everything in the world. But in the short term, they're very reliant upon oil. And an interesting perspective is that if China were to invade Taiwan, it would not be too difficult for the United States to effectively blockade China and starve them of oil at that point. Like we could use our naval superiority from a distance to basically starve the Chinese of oil. So to me, I look at what's happening in Venezuela, controlling that, forcing people to play into the US dollar system, and then what's happening in Iran right now. And my wife is Persian, so I'm very, very clued in on what's happening in Iran right now. But if Iran falls and a pro-Western regime is put in charge in Iran, that's a huge domino fall for Russia and China because that's a source of oil for them that's completely taken off the board. And now they have to buy in US dollars as well. So it's a really interesting, intricate game that's being played. And I don't know, I don't know that I would go so far as to say Trump has this master vision of what he's trying to achieve, but I'm confident that people around him are recognizing this dynamic and they're trying to array the pieces on the chessboard to achieve this sort of checkmate play on, that's what I think, on Russia and China. And so I guess the question is, say that happens. Say Venezuela falls under US sway and oil must be traded in dollars, and Iran falls and oil from Iran must be traded in US dollars. And I would also hasten to point out to the viewers that there's a reason Trump has been spending so much time in Saudi Arabia and the Middle East. I think it's to firm up this system and make sure the Saudis stay on our side. What's the impact? Like, does that mean central banks have to start reducing gold reserve supplies and they need to start loading back up on US dollars in order to be able to supply themselves? Like, what do you see as the long-term ramification of that?
Well, I think that China and Russia are already trading outside the dollar. I think there are pipelines from Russia to China that are being built, so they're trading in their own currencies. And I think Saudi Arabia as well. They met President Xi, 2 or 3 years ago, and I think most of the oil that Saudi Arabia is selling to China, that's been traded in yuan,
Okay.
or yeah. So, and Saudi Arabia, sorry, China, it didn't really depend much on Venezuelan oil, so I don't think it'll make much difference. As for Iran, yeah, that's still a wild card. I personally think, yeah, I probably don't know as much as you because you're married to an Iranian, but from what I hear is that it's not going to be that easy to get rid of the current regime in Iran. And I'm not saying that because I'm new. I don't really have an opinion or take any sides. But so that's the way I see it. I think the yeah, and maybe even if the petrodollar does stay around and people have to deal in dollars, I still think they wouldn't get rid of their gold just to have dollars to buy oil.
Hmm.
So yeah, and I think there's a lot of other countries out there that have oil that will will not necessarily be trading in dollars. But yeah, who knows? Back in the 70s and 80s, I remember when I'm old enough to remember there's all the talk that the dollar was dying, and then Paul Volcker came and saved the day by letting rates go to 20%, and America came back. So you never know; it's possible,
Yep.
but I think the trend is away from the dollar. But
Well, it's
yeah,
interesting. I pulled up Google Gemini next to our conversation because I wanted to ask it. I wanted to ask a question on this topic because I don't know the answer. So you're correct. Saudi Arabia and China signed a 7 billion or $50 billion yuan currency swap agreement. This allows the two countries to trade directly in their own currencies without needing the US dollar as an intermediary. However, the vast majority of Saudi sales are still in dollars, but it's interesting. So it says one of the biggest hurdles to accepting yuan is that it is not fully convertible, i.e., it's very difficult to spend globally. The yuan is not a currency that is commonly used in the world. The US dollar is still the one. So actually, Saudi Arabia can now take the yuan they receive from oil sales and immediately convert it into physical gold on the Shanghai exchange, which is interesting. So it actually somewhat reflective of the original 1974 agreement with the Saudis, which is they would take their dollars and immediately pour it into U.S. treasuries, right? But this is a backdrop that's supportive of gold instead, because now that theoretically the Saudis are taking the money they're earning from the sale to China and converting it immediately to gold, which is usable for them and protected.
yeah,
So
everyone accepts gold.
everyone accepts gold. Yeah. So, all right. So this has been fascinating. I wanna end on Bitcoin. So I know you're not, I know you're not a fan of Bitcoin, and I don't think most of your listeners are as well. But there's some interesting topics to discuss with it. So to go back to the Bitcoin Standard, which is a great book, and I would recommend, even though it's a pro Bitcoin book, it's just an interesting look at global economics, central banking, and reserve currencies and everything. One of the author's arguments against gold as a true source of money in the future is that it's a physical asset that can be seized. So, I think you mentioned FDR illegalized gold and forced everyone to turn their gold in as an example. So his argument was the problem with gold in the long run is that banks hoard it and then they end up creating their own currencies based on the gold that they hold. And then there's nothing to stop them from just printing and printing and printing more and more money reflective of the gold that they control. But the issue is that it can be seized. The argument, and I will just let the listeners know, I don't really have an opinion one way or the other on Bitcoin right now. I wish I'd bought it in 2013 when I was making fun of it, when it was like $500 a coin. I would have made a mint. Um, but his general argument is that because it's decentralized, because it can't be seized, because it is this distributed system, it's superior to gold. Now, I know that's a very loaded statement to say, and I'm not saying it's the statement. I'm saying the author said it's the statement, but I'm just curious your perspective on it, because at a high level, if you accept that we've reached like a tipping point, right? A tipping point where now people ascribe value to Bitcoin, right? And that was kind of the thing. I mean, I think for a long time, everybody was sort of like, this is this kooky thing and what's the value of it? But it seems like the planet has sort of moved in the direction of saying, okay, we all accept there's value to this thing, right? I feel like we've crossed the trust barrier where now people say, okay, Bitcoin has value. And I agree with you. I'm going to agree with probably a lot of what you say, but we seem to have crossed that barrier. Doesn't Bitcoin then solve some of the problems that gold creates, which is, it's can't be seized. It's decentralized. It's a hard asset in terms of like, there's a very fixed amount of Bitcoin that can possibly be produced. There can be no more than that. Like what do you, as a person, I assume that is relatively opposed to Bitcoin, like how do you feel about that? I'd love to hear your perspective on that.
Well, yeah, I mean, I looked at Bitcoin back in 2011, 2012, and yeah, I even traded it and had some. And
In 2011, really?
yeah, 2012. Yeah, I remember
You hold
buying
on to it?
Bitcoin. Um,
Did you
well,
hold on
I
to it?
held on a bit. I did sell for a profit, but I didn't hold on. Very long term. But the concept and the white paper is really good. But then I started thinking, who is Satoshi Nakamoto? And at the end of the day, it's a software, the blockchain and Bitcoin. And if you don't know the provenance, there's always the danger that there's a back door to it,
Mm,
and that it can be seized. And it has been seized through exchanges by the US government, the UK government. So it's not really, I don't know, in a perfect world, it wouldn't be seized, right? But I think the US government has a lot of Bitcoin. The other thing with Bitcoin, yes, uh, the it is supposed to be trustless, but at the same time, people can see what you're doing, right? It's not very private, in my opinion. With gold, or silver, you have a little coin in your pocket, and no one knows that. Yes, it might be seized, but even when FDR seized the gold, it was voluntary. And there have been people like, I think, John Anderson from SD Bullion, who's
mhm.
done research that only a quarter of all the gold was handed in the US.
Oh, interesting.
So, yeah. And I've read about the fact that quantum computing will be able to one day break the Bitcoin code as well.
Mhm.
So, but I agree with you. Uh, yeah, at the moment, Bitcoin is seen as a valuable asset, and I won't argue with that.
Yeah,
But yeah, and with gold and silver, of course, or with anything, Ari, they can seize your
sure.
property with
Yeah,
taxes, through force, and even Bitcoin. Ultimately, they could, they could come into your home and say, "We know that you trade Bitcoin. Give us your private key." So that's the way I see it.
yeah. Well, it's so my constraints on Bitcoin for a long time were that I thought it was a kooky concept, and I couldn't get people to explain it to me correctly. I remember distinctly when I was at Goldman in San Francisco in 2014, 2015, when Bitcoin was like, it shot up above 1,000 a coin, it came back down. And myself and everybody else in the traditional finance business were sort of like, turning our noses up and like, you see, it's a fraud, and the whole thing's a joke. And I went to a cryptocurrency event in San Francisco, and honestly, part of the problem with Bitcoin is I think a lot of the zealots for Bitcoin don't explain it very well in the first place. So I remember distinctly being at an event. I mean, when I read the Creature from Jekyll Island and then the Bitcoin Standard, it was sort of eye opening about a lot of things, gold included, hard assets, reserve currencies, all this stuff. But I remember distinctly being at an event, and I said to this gal, I said, "Hey, look, I'm interested. I want to understand what makes, like, why should I buy Bitcoin?" And her answer was, and I quote, "Well, look at how much it's grown over the last 5 years, and then just imagine that into the future. Why wouldn't you want to own it?" And I remember saying, like, and she was right, by the way. I should have bought in 2014, but the argument was so bad. Like, you can't make an argument to buy something based on the last 5 year growth trend and say, like, it's just going to continue forever. But the thing that I thought was compelling and interesting because I think gold enthusiasts and Bitcoin enthusiasts share an aversion for central banking, right? They're kind of like, I would say gold and Bitcoin people are sort of like cousins, right? With different ways of trying to do it, but they sort of have the same goal, which is a removal of currency debasement, a removal of fiat, and a world of hardback currency. And the big issue with Bitcoin, in my opinion, is why would you ever spend it? Like it's not an easily usable asset class to actually spend, right? It's not well designed for spending. It's slow, a bunch of issues. One of the arguments that the author of the Bitcoin Standard, again, and I'm sorry to quote the book so much, but everyone should read it, it's really good, is that what he sees as the ultimate manifestation is that banks build their own reserves of Bitcoin and they hold them, and then they produce currency that are backed by their Bitcoin holdings. And that would be the currency that's easily tradable, which I guess you can make the same argument for gold, which I think historically was what banking was doing, right? Banking had its own gold reserves and they would issue their own, paper that's backed by their reserves. So we'll see. It's an interesting future. So, so I like to end most of my interviews with a similar question, which is, sorry, I didn't prep you for this question, Mario. So this is coming at you out of the blue here. What is your top 1 to 3 reads you would recommend for people? You're an expert on gold and on commodities and commodity cycles and everything. What would you recommend to people if they really wanted to learn and understand? What's the book you would recommend? You have to read this book. And I've mentioned many here, but I'd love to hear your
Yeah. I mean, the top one about money is What Has Government Done to Our Money by
Okay.
Murray Rothbard. He's from the Austrian School of Economics. He passed away, and it's not a book that's you need a PhD or even a college university degree to read, and it goes through the whole history of how money came about and how gold and silver became money. And I think it's a really good book for everyone to read to understand money. I think it's a topic that it's really not taught very clearly in school or even university. The second one is Fiat Money, Inflation in France by Andrew Dixon White. It's not a big book, and it's about revolutionary France in the 1790s and how they experimented with a currency called the assignats, and even then, the assignats were backed by land, like the land they confiscated from the clergy and the
Right.
aristocracy, but they printed so much of it that it collapsed. And
Yes.
I think that's the road we're
remember,
in. And that book, having read that book, really has prepared me for what's happening, since the great financial crisis. The third one, what's the third one? I don't know. Yeah, I would say the book about the BIS, the shadowy, what's it called? The Tower of Basel. Sorry. Yeah, yeah, that's a really good book. It'll explain to you about central banking and about the Bank for International Settlements, which is a really powerful institution that very few people know about. They think that it's just an international regulator, but the BIS is it's like the Vatican or Washington D.C., and it's its own little country in Switzerland, and it's the central bank's bank. So yeah, those three I would say would be a good start.
Incredible. I will pick all 3 up. Usually when I ask this question, I've read the books. I haven't read any of those books, so thank you. And like I said, selfishly, I asked this question to give myself a better reading list. So I appreciate it, and really appreciate you being here, Mario. I'm sure the listeners appreciate it as well. If you haven't yet, please check out Innecco64 on YouTube. Mario is an expert. His channel is amazing. And thank you for watching. Please subscribe to our channel as well. And we look forward to having you guys here in the future and continuing to talk about everything. This has been another episode of the Timeless Investor Show. Think well, act wisely, build something timeless. Thanks for being here, guys. Thank you, Mario.